Hello, Oracles. Today I wanted to break down for you guys what I had promised previously, which is breaking down the difference between what I chose to do with my portfolio and switch away from Tesla stock entirely to buy into dividends and real estate versus had I just kept buying into Tesla stock over the last few years. So I'll break down all of those numbers for you guys today to show you the differences of it. And now, realistically, I don't think there's any wrong way to go about this. I think Tesla is going to be very good in the long term. For me, I was just looking at a little bit more diversity and keeping myself with a little more agility for what I was planning on doing, which is retiring in the next 5 years, or at least stepping down from my position to more a part-time position. And my thoughts on all of that were with Tesla, I don't know what was going to happen in the next 5 years. I do think we're going to go up, but because it fluctuates so much, timing of it in the next 5 years is still going to be very important. And then do I really want to sell any shares to get to that point where I want to be? Versus, hey, now I've got cash flow coming in right now, and I'll have more versatility to be able to do what I want with it and then buy Tesla stock later on as well and continue building my position. So again, I don't think there's any wrong way to do it. This was just the best way for me to do it. And I'll go over all the numbers with you guys and explain it all how I broke it down. All right, so to break it all down to start, my starting point, we're going to start from the end of 2022 after Tesla had already sold off entirely because at that point, I had been accumulating Tesla shares over the course of 2022 as we had been dipping. I was catching that falling knife, and I said that, you know what? I think catching the falling knife is going to be perfectly fine. We will rebound. Sure enough, we did. But for me, I was accumulating all of those shares, lowering my cost basis, and then I kind of had some ideas as to what I could potentially do for the future, and my mentality shifted at that point. So I didn't sell Tesla at the bottom. I waited till it recovered. So at the end of 2022, I had 70 shares of Tesla stock and about $20,000 in cash. Now that cash that I had been putting aside, that's what I was looking to be purchasing some real estate with. I was using it as my safety net as well, my emergency fund, and I was using it to say, hey, I want to buy some real estate in the future. I'm looking to buy a house. So I was saving up that cash. At that time, I had no dividend stocks and no real estate. I was renting, and that was about it. So I just had cash coming in that I was putting in there. And I was putting about $50 every single week into the stock market. And so at that time, my total portfolio value was about $34,000, and I had zero cash flow coming in from any of my investments. And so then we fast forward to 2023. So at the end of 2023, that is where I decided to buy my house. So I was working on that. I didn't actually close on it until January of 2024, but everything was basically in the works at the end of 2023. So at that time, my portfolio looked like this. I had about 50 shares of Tesla stock, about 50.57 shares to be exact. So I did sell 20 shares over the course of the year as it had been climbing because I wanted to put that cash into other places. So I had 50 shares left at about $250 in value for about $12,500 for Tesla alone. Now, in putting that money in other places, I ended up spreading my money out and I still had that $20,000 in cash because I had built up more and I had put about $2,500 into that real estate. There were about $2,500 in things that I couldn't even count as equity because it was just expenses towards the house. But I had $2,500 in the real estate, $20,000 in cash, over $1,000 coming in when it came to dividends and interest, and my total portfolio value was about $68,000. So I doubled my portfolio value over the course of the year by selling off those shares and switching over to dividends and real estate. And doing the math on it, had I taken all of that money that I had coming in, so the $3,000 from my side hustle, the $50 every single week, instead of adding it to the other positions and taking that $20,000 in cash and putting it all into Tesla stock at the very bottom at that $100, I would have had at the end of 2023 298 shares, which would have given me a portfolio value of $74,500, but I would have had zero cash flow coming in, and I still would have been renting and not owned real estate. So yes, I may have had $6,000 higher when it came to the portfolio value, but I would have had no cash flow or versatility. And that is, again, based upon me timing the market perfectly and purchasing everything at the very bottom with that $20,000 and then averaging at about $200 per share as I was purchasing on the way up as the year went along with the other $50 and the side hustle money. So some people may say, hey, that's still $6,000 more that you would have had. Yes, but I would have lost the versatility. I wouldn't have owned a house or anything like that. So that is why my mindset is where it's at. And again, this is why it comes down to what is your goal? And then we fast forward to the end of 2024. And the end of 2024, I had 2 shares of Tesla left. Now, again, I've mentioned this before. I've had plenty of other shares in other places. I've got VU and I've got in my IRA, I've got QQQM, I've got VTI. In my 401k, I have a lot of funds that have chosen with a lot of Tesla in it. So I have a lot of Tesla exposure all over my portfolio. But as far as my main portfolio and holding the individual stock itself, I cut it down to 2 shares. And now, at the end of 2024, the value of that is $403.84. So, a total value for my Tesla stock alone of just 800 bucks. Not much. But again, I've diversified elsewhere. And looking at my entire portfolio is about $54,000. I have about $7,500 in cash at the end of 2024. My real estate is about $32,000 of equity that I have in the house. And so my entire total portfolio is just over $108,000 at the end of 2024. And I have just under $2,100 every single month coming in from cash flow. And now we look at had I kept adding that $3,000 for my side hustle and the $50 every single week into Tesla, I would have had about 320 shares at an average price of about $250 purchased over the course of 2024. I would have had $0 in cash. I would have had no dividends coming in, zero real estate. My total portfolio value would have been about $136,000, and I would have had no cash flow whatsoever. So yes, my total portfolio value would have been about $28,000 more, but let's take a look at how much it fluctuates. Had we done this calculation back at the beginning of November when the stock was at that $218 gap that I think we're going to fill, my portfolio value would have been about $70,000, which is significantly less than what I would have had. Now, granted, I would also have to calculate in my portfolio value because I'm sure those numbers would fluctuate as well, but that's how much Tesla stock can move in such a short period of time. It can go up or down, and that's why timing of it is so important if you're trying to get out and sell. Now, again, I'm not looking to sell for profits. I'm looking for a long-term portfolio that's going to be generating cash flow for me so that I can retire early. Tesla does not provide that yet. I do think that they will provide dividends in the future, but even if Tesla was going to provide dividends in the next 10 years, let's say I got myself up to 1,000 shares. Even if Tesla was going to be paying $4 a year per share when it came to dividends, that's still only $4,000 per year. I'm already making about $6,000 per year on my current dividends. So in 10 years, I would be making significantly less. You can argue that the portfolio would be significantly larger because the value may be a lot higher, but then again, I would have to start selling off those shares. Yes, I could play options and things like that, but that's a lot of other work that goes into it versus now I'm just building up a portfolio that's bringing in basically passive, worry-free cash flow that I don't have to do anything for, then I can now purchase more Tesla shares with if I wanted to and use Tesla as a bonus on top of everything that I've got. Plus, I own the real estate that I live in right now. I'm not renting to anyone else. So I own this and it's generating cash flow for me. So I have all of this cash flow coming in at a much higher rate than I would have had with Tesla. I would have been at the mercy of my employer to raise my pay more. Last year was a 0.5% raise. Next year, I might not even get enough money to be able to offset inflation. So based upon all of that, my income coming in, I might be able to invest less and less into the stock. And because I have less money coming in and the stock price would continue to appreciate, I'd be able to buy less and less shares over time. Versus now, I have more cash flow coming in. That cash flow is getting larger and larger, which is outpacing inflation, which means that even if Tesla stock continues to climb over time, I will still have more cash flow coming in to be able to buy more. And I have no doubt that Tesla is going to continue to fluctuate and have its highs and lows and big dips here and there. And now I have more knowledge on kind of watching how Tesla does fluctuate like that. So I will be able to catch more close to the bottom when it comes to the stock price swings and be able to purchase more stocks for less. So for me, a lot of it comes down to timing because again, you look out 6 months from now, let's say where the market is turning into a 2022 type scenario and we're selling off. Let's say we do come down and fill that 218 gap. Well, now we're at that level at 218. Would I rather have $50 every single week to be able to purchase Tesla stock or what I currently have, which is about $150 every single week coming in to buy Tesla stock? And if I wanted to, I could take even more money because I have the cash flow coming in from the real estate. So realistically, every single week, I have about $500 every single week coming in that I can utilize to purchase anything that I want with. That's 10x more than the $50 I have every single week if I was based on just my job. So again, that $500 every single week is just from the cash flow that I have coming in from real estate and dividends. That doesn't even include the $50 every week that I'm putting in from my job. So again, just the way I did it, and there's no right or wrong way to do this. It's just, again, based upon how you want to run your own portfolio. But for me, I wanted to have that versatility. I now basically have about $2,500 every single month that I can utilize in whatever way I want when it comes to the market, bills, or anything that I want to pay off. That is investable money that I have for me that is free. Versus before, if I had just went all with Tesla stock, I would have about $250. So yes, my portfolio might be about $28,000 less when it comes to its value right now. However, I have about a 10x income and cash flow to be able to play around with on a monthly basis. And honestly, I'd rather have 10x more cash flow than portfolio value based upon what I'm trying to grow in the future. When you value a company itself, one of the most important metrics is cash flow, not the value that other people think it is. And realistically, the stock price is the value that other people think it is and what they're willing to pay for it. That is not the intrinsic value of the company. So those two are completely disconnected. So you have to remember that the intrinsic value of the company are very rarely what the actual price of the stock price is for that company. So when you're looking at intrinsic value, a lot of times you're going to be looking at cash flow. What cash flow do they have coming in? And what is the growth of that cash flow? Tesla does have growing cash flow. And then, of course, it comes down to however you're going to analyze that and decide what value you're going to be putting on that. We will discuss that in tomorrow's video where it's bulls versus perma bulls and a lot of that discussion. But realistically, it's the cash flow, which is the most important part of the company. So for me, looking at my portfolio as my own company, I want that cash flow coming in. I don't want my value to be based upon whatever the market thinks that the value of my portfolio is, because that's going to fluctuate regularly. But if I have growing cash flow and the market thinks that my portfolio isn't worth all that much, then I can buy it on a discount. So when we get to the point where the market doesn't think that Tesla is worth as much as it is right now, then it's going to come down at a discount and I'll have more cash flow coming in to purchase at that discount. That's why I switched my strategy, was to be able to get to myself to that retirement point earlier by having that passive cash flow coming in and have more money coming in on a regular basis to be able to purchase Tesla stock at a discount. That was my strategy. You guys can let me know your thoughts in the comments below what you decided to do. I know many of you decided to just roll right through it. Great job holding on that strong. But let me know your thoughts in the comments. Thank you guys so much for watching. I appreciate all of your support. Have a great one.